Welcome everybody. So welcome to the Monday and pairs for the week. 6 pairs. I have 6 pairs. 6 pairs. But one is running already. 1, 2, 3, 4, 5. And the DJPY. Okay. Where is the GBP NZD? Where is GBP NZD? Okay, so I will add GBP NZD. Down to okay. Very. Okay, so I think I have this one too. Before I will start, I would like to take you through this position. This was a position that I anticipated, I think, from earlier this month. I was looking at this account. So now we can see it clearer. We had a high here. Price dropped impulsively. ADV value area here. Price take this value area, and now here it becomes a value area where volume was triggered. We left all this gap here. So high is winning. Then what happened? Price moved impulsive correction. Volume generated. We built volume here. We continue impulse to take out this side, take out this side, take out this side. We took out all of the highs here. What happened? Price tapped into this structure, which is our signal of price action. We continue the move. And what happened after price? A trigger volume. I see. As price triggered volume, this is on the weekly. Price moved impulsively to the downside. We are playing this range. We are playing one, left a gap. Price moved below. Now we have this one structure here and the third touch. And now the second touch and price are dropping impulse. And we have this correction. What you are looking for is continuation. This is the volume triggered, volume being built. And we continue the move to at least 90% of this structure or to the lows. So this was the structure it happened on the weekly. It's a gap very important. And what's another great thing that we have to take advantage or take a look at is such structures now I see it is almost similar like the one see now. We have something called the inception of the market. You have things on the smaller degrees and at the same time on the higher degrees. So we have these structures here. Price to be breaking, then look back in. Price moved impulsively. We may start to see a correction. All of this is a correction. We mean a correction, but within the correction we can have this impulsive. We can say we move more corrective than these moves, although they are all in a corrective structure. You can see here we had impulse, correction, continuation, but it is the same structures within this structure. This is a bearish continuation flag. A volume being generated, or we are building volume to continue the move. So these are the areas where I'm looking forward to the position my homework. And I move impulsively. So let's step down to the daily. when we step down to the daily, we can see say there was a hook point here. Price within this impulsive one, price left a hook point. We continue the move to impulse correction, continuation, impulse correction. Here volume was built, volume was triggered. If you can position yourself at this area when price is coming here, you can look at this as impulse and this corrective structure, signal price action, confirmation. You can make money at these ones, but you know that as price here is the original value area where price is going to snap back to before we move. Now we left a gap here. This is the first impulse. We took out this high, but we didn't take this high. This first impulse, we took out this high, but we didn't take out this high. And you can see the price forming this kind of correction. We left all of these gaps. Now we can see 1, 2, the third touch, happening to tap into the structure. We push back in impulsively. Again, the third touch now happening to tap into the structure. There was this 1, 2, 3 leading into the zone, right? To give us the third touch. What happened was with a taking outside gap, we tap into the zone and we push back in impulsively. And our price essentially started a corrective. See, this structure not happening when I see it is the same structure that is happening here. Impulse correction, we are expecting what? Continuation. The same thing that happened with our impulse correction, we are expecting what? Continuation. Price equals 1, 2, 3. Performing this corrective move, they tap into the structure. Again, 1, 2, 3. Price ever tapping. What did we see? We had impulse correction, continuation. Let's look at it very closely. We had impulse, this kind of correction, impulse correction, continuation, to give us this 1, 2, 3 structure. So it is the same. I'm running you through what contributed to me executing this trade idea. Now on the daily, I would have stepped in here from this signal and confirmation price action after we took out all these gaps, and price broke above the structure and we broke back in impulsively. I made money here towards this low. So here was the target for the first round. I made money here and price started to do what? To reverse. And you're forming a very corrective structure. And then you continue the move to broke here. Price invalidated this setup, but we pushed back in impulsively from the corrective structure. Remind you, I'm on the daily. So if you can see these structures on the daily, it means they are clear on the 4 hour and the 1 hour. This is the sequence. So what I was reading here was a continuation within this bigger continuation. Impulse correction continuation structure. Impulse correction continuation structure. So it was a continuation within what's a continuation structure. I made money here, and now price is moving this impulse to the upside. So let's look at the sequence. The positioning of the structure is good. I'm positioned at a value area from the weekly to the daily. You can see from the 4 hour that price corrected. We had this impulse correction and we dropped, and this was the whole impulsive move. Impulse correction, again price dropped, and within the impulse we had this corrective structure, which was the impulse correction continuation. Now what happened was price dropped impulsively and price left a hook point. This is very important. Price left a hook point, price drop. What happened was price reversed or retraced to tap into the structure. We broke below and we push back in impulsively. This is a signal price action and what? Confirmation price action. Exactly. So when price broke back in impulsively, what happened was price airdrop. This was the risk entry, and it wasn't even, this was a reduced risk entry. It was a reduced risk entry. Why? I didn't know any risk entry, no risk entry, and we didn't put on me take key, as reduced risk. These are all opportunities that Nanka could have taken advantage of, and I did. Some of them were tradable, like this 1, 2, 3 was tradable. This was an insurance entry, but let me focus on what is happening here. I will step down to the 1 hour. So on the 1 hour, this hook point is clear. You can see price drop impulsively, and within this impulsive move, what did we see? Price left the hook point. Volume was built here. Now price started dropping before we started to retrace. So when price came to this structure, the tap into this structure, and the reverse say, on the normal circumstances, or like within my tower, here is the risk entry. Here is the risk entry. I can get in on 10 pip stop loss. This was 14 pip stop loss, by the way. So let's say 10 pip stop. I'm protected. This was the risk entry, and you can see why it is risk. It is called risk entry. So I didn't take this trade. I didn't. What I them training for was for price to close on the 4 hour. The price to close on the 4 hour like this from very structurally. Price increasing on the 4 hour from this rejection like this. Put my stop above was 14 pips like this, and getting on the move. This was a valid opportunity. Now this was a reduced risk. Now within this structure, you can see you have gotten 2 entries. If the position is good and the sequence is good, you will get many opportunities within this structure. Within just this impulsive move, this retracement, you have gotten the reduced risk entry and the risk entry, which meaning we were protected. Let's look at this structure here. I talked about this structure in my previous video. Now we come back to this structure again. Here's on the 4 hour. This is a 4 hour structure, but I will identify the highs on the structure on the 1 hour. You can see say we left a gap. Price left a gap. We have 1, 2, and the third touch. So how high this is the mechanics. Price left this high here. Price left this high here. What did you see? Price took out this high, but we didn't even tap into the zone. This high took out highs 2 way, but I didn't break the structure. What happened was third touch, the third one there, and it took out all of the highs, and it tapped into this structure. We pushed back in impulsively, and it started saying, "Yeah, correct." This is the 1, 2, 3 driving price leaving the gaps, volume being generated. Okay, so let me draw the details on, because even with me knowing this, it doesn't give me an advantage that price is going to, I know exactly what price is going to do. I don't know, and I don't have to know to make money. All I have to do is observe the price structure. So like this, we have this 1, 2, 3 structure. We tapped into this here. This is the signature entry, model 1. We can look for sales after this when I'm on the 1 hour. And look for sales after this. Stop 10 pips. least. You don't go below 10 pips. So let's say your least structure, least stop loss 10 pips. From here, target the same target as this, and now you would have been running, I think, 5.49%. At what was the time? It was around 12 o'clock, daytime, 12 o'clock. So I would have gotten this opportunity. It was daytime, Thursday, March 25th, 13, which is 1 o'clock. I would have gotten this opportunity. Fine. Price moved impulsively in a retrace. Here is the reduced risk. If I want to take this structure, this is the break of the structure, reduced risk, 23 pips. This is another opportunity that I would have taken, which is a reduced risk. The stop is too much. I think 23%, the loss will be 3%. Like now, I would have been running 1%. Or better still, I could have waited for the insurance or entry. So you can see there's a mechanical thought process or systematic process behind what I do when I'm in the market. You can see there's a mechanical process behind it. I will do this. Okay. So now this trade is running 4.8%. I'm looking for it to at least break this structure, because the volume that has been built here is massive. Here in Duka, they will tap into the structure before, and we can see price has been trending. The sequence is healthy. We have this sequence will be healthy. Impulse within this impulsive one in your career, you get this kind of opportunities. If you have the skill set of a professional like me, you will be able to identify these opportunities and make money out of it. You don't have to complicate anything. There's no complication here. There's no indicator here. There's nothing. Just impulse correction, flag pattern, bullish structures, bearish structures. But it is simplistic. You have to identify your position. You have to be aware of where you are positioned in the market, the structure where in which price is in right now, so that you can position yourself well. Now when we look at this structure, we can see say here, if you are looking at the structures, you will move 90%. Like this, somewhere in the after one. So if there's a likelihood that price will be 90%, this one is 30-something%. Let's say I'm getting on this one opportunity and allowing the setup for the week ahead, manage my positions, add to my positions, like what is happening here. If I'm getting clear opportunities like they're happening, I see not surprised ever be do I see, I would have been 18%, make me multiplying like 3. And this is no joke. I'm serious, because I can identify what is happening in the market, and I have the ability to execute it. So why not? You can see, and it is happening. This one is on around 2 o'clock daytime. Like correct opportunities. Enough for that one for the day. Let's continue to. Let me take you through our pairs again. The next pair, so you can see the same structure again. We impulsive move never down. I've been able to capitalize on these opportunities up to the downside here. So if just a single position at the top here, or let's say reduced risk, a single position is 8%. By getting in on, let's say 8%, 11% on this whole move, I would have gotten this opportunity I would have gotten this opportunity. This is 2. So it will be like 11 times 2 plus here. If you have the skill set, I will always say this: if you have the skill set of a profession, you always make money in the market. The market is an endless flow of opportunity. An endless flow of what? Opportunity. An endless flow of opportunity. That's what the market is. Every single time, the market is leaving clues of opportunity. Every single time. It is our job to identify where can we position ourselves to take the entries, the opportunity that the market presents. Where can we position ourselves to take advantage of the opportunity the market presents? Now, let me believe this, because we have this structure. If you've been following me throughout the week, you can see, say, I'm not surprised by this impulsive move because of what is happening on the JP225, right? So they happen when I say near, you have price moving impulsive. You have CCR there, person happening because they have person happened before. So we had price moving impulsive from the ASIAC daily. I'm not surprised the price ASRDV, because we are towards the lows, though close to the lows. And our price forming this kind of structure. And within the structure, we had 1, 2, 3 impulsive move towards the zone. Here's the 1, 2, 3. So there's what there happens. Then person have maybe happens. For the days ahead, price the bed, then we push it back in impulsively, and then I look for the models and I continue the structure to the lows. To the lows. So now price is in the signal. This is a signal price action. This is the signal price action for price to push back into the structure. Give me a squeeze, either a squeeze or either a structure or a non-structured one. Let me can you? So when price push back impulsively, the mission is say either I will get a 4-hour structured, a 4-hour non-structured flag, which will be a 1-hour structure. If a 4-hour non-structure, that's a 1-hour structure, and a clear, I can take a risk entry in the 1-hour structure. If say a 4-hour, if say a 4-hour structure, it will be 1-hour structure, and automatically. So if that one, okay, if that's the case, I would also take a risk entry. If a 4-hour non-structured, I will take the reduced risk on the 1 hour. But if a 4-hour structured, I will take, a friend is saying, risk entry on the 1 hour. So time for price to push back into the structure, and then I look for continuation. Let's look at the dollar index. The dollar index has been producing a lot of boosts. So you can see, say, dollar index are dropping impulsively. Before ever dropping, price for me is this structure where it is called the M star pattern, and also it is part of the footprint entry or the 3 and 4. So let's look at this 4-hour structure. You can see the price dropping impulsively with those volume. It was supposed to move to the lows, but that didn't happen. What happened was price corrected, and then price pushed back to tap into the structure again. this volume that was built here, price put back to tap into the structure again. So when who's a day we are, I'm not looking for buys, I'm not looking for another BBR. We can, if you are using the money, you can look at this as 1, 2, 3, and then something like an expansion. But that's not what I mean. Who a volume being built, we drop this the M star pattern, and we dropped impulsively. Now I will delete this because there's a likely we see a trendy. There's no structure where I say make me a stop the price. So the price a little gap where I see. If you say to me based on the file, you can form a form of correction, and then if surprise everybody will tap it back into this loose, you continue the move. Or volume was built here. This one can be an insurance entry. So we this one is what you can see. This one is an unstructured 1 hour flag. I will take the reduced risk on the 15. So this one at least, because it is an unstructured one now, which might stop about 17 pips, I can take this straight like this, reduce the break below, and the lows is so this one can be a trade. I can get wiped out. Yeah, I can get wiped out because you have original area 2 here. I'm doing it because volume was built here. Volume was built here. Now price about tap into the structure. The Levy and gaps we gap price high swing to we have this structure here. Instead of make corrective, what we have is our original window as the price drop here. I will mark all of them on. So you're giving the price a drop pay that structure. Not price performance salary. So this one can be a trade, right? So this one can be a trade. Because on the 15, I can take trades on the 15. If a non-structured one now, if it is a structured one now, this one we can see is a structured 1 hour. This one is a structured 1 hour flag by a non-structured 4 hour. So 4 hour, you can see that it is non-structured, but on the 1 hour it is structured. So if this one is the case, it means I can take a risk entry on the 1 hour. This is what I was talking about. I will take a risk entry on the 15 rather, because it's structured on the 1 hour. So this one like this, price if break key below the structure, we look back in. I can take this and put my stop above this. This is why it is called a risk entry though. Put my stop above that side and target the so if I'm getting on this mover now, I've gotten one here and I will say reduce risk. Insurance entry no we non-structured 1 hour. Insurance entry is a non-structured 1 hour. Again, if it is non-structured 1 hour, that's a structured 15 minutes, I can take the risk entry. But when we come to the 15 minutes, we can see this one is also structured, so I can take it as a reduced risk like this. The insurance entry as a reduced risk on the 15 minutes, and then I continue the move. So now because I've gotten 2 opportunities. Let me go to the EUSD. But what was the time? 7:15 in the morning, and this one is 8 o'clock in the morning landing session. I would like to go to EUSD before then. Yes, so this is clear. So now instruction level 4 hour in 4 hour. We are at a key inflection point, price drop here. But we can drop in the actual sense, can we say position at the lows here, right? Position at the lows here. When we go to the 4 hour, when we go to the 1 hour, correction impulse. Up to answer, there's a likelihood, or there's also likelihood the price where they are back tap into ACRC. Let me wait for clear structures. But we are not any this is not any clear structure. There is no any clear structure here. I use a key inflection point on the 4 hour. But I'll be waiting for price the formula structure. I will tap into and see if we are going to go to the upside. A clear 4 hour structure, and continue the move. So I've been talking about this structure for months. per month. So for on a weekly, a movie there was science structure we were price drop we into and drop in your impulse, and then we spend 1, 2, 3 signal structure looking for price to and dropping last year, because we still have our gaps at the lows. They were in gaps at the lows. So as this expansion nearby 1, 2, we left a gap, impulse correction, continuation, and our price air drop you are see. Here is the signal structure. Here is the signal price action and the confirmation. The signal price action is price getting to that accuracy, right? Because I think it's not a third touch for this bigger expansion, and also the third touch for this internal 1, 2, 3 structure. But the happen is a price a breaky above tops ring invalidating instruction, but still it was a signal to a breaky above a breaky, but it was a signal, and now price airdrop impulsively for the past about 3 days. The price airdrop impulsively. Am I going to look for structures or someone's a price drop breaking below in structure and so? So let me look at the daily, see whether there is a structure I can identify. Oh, I see in there. I don't see any structure. I don't see any structure here. Only this high here, but no, so high will be taken out. This is an inflection point. I think my way started, the correction started. So 1, 2, 3. I don't really have any kind of high here. This hook point here. But we mean average areas. These are all average areas. So I won't identify this, but the name will say price are for me in 1, 2, 3 structure in the airdrop. A signal price action. This can be a this could be a confirmation. I was saying a confirmation, but because here even the overriders had the second touch, and I say a break it below, you break it back in, the structure before. Someone look to me and say, okay, this is clear confirmation. But let's look at this structure. But it's at the value area, you break it below this structure impulsively. People can tell me to taking on another opportunities to lose because of 1, 2, 3 drive. Me not count, but I'm not going to do that. So price and drop it. If we are going to move, let's come to this structure and let's look at what will happen here, because we said that new structure here. This is the 1, 2, 3 with me, but if we are going to move to this lows, there's multiple opportunities for me to take advantage of. Multiple opportunities. Getting above, I say, no, it is not a great opportunity to do. It's no great thing to do that. So, yes, let's look at this structure here. This GBP AUD. is to a core, but you can see from the weekly you can see we have this range, this bigger range. Yeah, this is the range I'm coming at. In a price, the movies are 1, 2, 3. The movie impulsively. Before answer a bit, you could break his structure. What happened? Before answer, see, me try signal price action and price is also building. At that time, price was at the zone. It was the signal. Now price M4 is our correction way. So what I wrote was signal price action, and price is also building volume to move to the downside. Price is also doing what? Building volume to move to the downside. Left shoulder. What is left shoulder? So this was the structure. We had this 1, 2, the third touch. We look above. We tap into the original value area. Tap into the original value area. How did we tap into? Move impulsively, correction, continuation. We had this 1, 2, and then the third touch to break above the structure and move back in. Now at the structure, we form this 1, 2, 3, driving into this zone. It was impulse correction. This is a reversal model. This is a reversal model. Impulse price ever corrected to the upside to give us sign structure. This is a reversal model. Even within the structure, everything was there. Pricing movie impulse, and then we started another correction in a drop here. In about reduce our lows in a price air correcting. A breaky below, a breaky back in the structure. After some reversal model here for me. So this structure it is at a great area. This is how we move in the first continuation. Let's look at the how I form on the 1 hour. This is an unstructured 4-hour pattern. And now our correction is forming to the downside. So on the 4 hour we can see the price drop impulse. Beginning we had this move here and a price drop here. Okay, so I will allow price to form a structure. A tradable price a bit me and I will tap into this structure. Price a bit tap into this structure. Then I will look for continuation at risk entry. I can take risk entries here, or I can take a reduced risk entry at RC and then continue the move. So let's look at what we can present. UP ready. So is it possible say actually can go from this side? This on the 1 hour, I don't know. Or it's how we also have it. We left a gap on the side. There was a mechanics. That mechanics no. The mechanics are available in a price for correction. And then this impossible is happening. Price for me is a structure. But the main target Nankasa is Surua. So is it because the dollar index can move? How the dollar index now forming? It's likely we say a bit more moving. But can this be like a structure between a pushy price to the upside? Let me look at the EUSD setup move. For EUSD like this, even if say this is the hook pointer, price didn't tap into the structure. Yeah, so the EUSD there, I mean when you say okay, I don't know see a between movie for now. But the GDP way how it is positioning itself, can be a great trade. Okay. Now, can this be a correction of what insurance entry to continue the move? It can. A bit me ISR to continue the structures. By the way, I won't take this trade because it is not a footprint entry, and also it inform any kind of tradable pattern there. I'm on the 1 hour. When I zoom out, when I go to the daily, inform me anything. At the inflection point, I know it's an inflection point. I will look for price to build volume, so I have to wait and drop the first one. There can be likely a price anchor, a better back, then you form this structure, and then you continue the move. So you wait it, you wait, will need to be